Today, I want to talk about one piece of Biden's tax proposal. Now, nothing has been passed yet, but President Biden has proposed the American Families Plan, which would substantially change tax rates for high-income individuals. And one aspect of this reform includes increasing the long-term capital gains rates for those with income over $1 million. Now, historically, long-term capital gains have been taxed at the preferential tax rate. So depending on your income, long-term capital gains are taxed at either 0%, 15%, or 20%. And for those lucky individuals who have income over $500,000, roughly, long-term capital gains are taxed at 20%, which is much lower than the ordinary income tax rates for people at that income level, which would be around 35 to 37%. So the American Families Plan would eliminate the preferential long-term capital gains rate for those with income over $1 million. What this means is that long-term capital gains over $1 million would be taxed at their ordinary income tax rate, which could be as high as 39.6% under the new proposal, since Biden is proposing increasing the highest rate from 37% to 39.6%. Now, unfortunately, this won't apply to many people. I think it'll only apply to 0.3% of households based on their estimates. However, it could apply to business owners who are planning to sell their business soon and expect to incur a one-time capital gain on their business in excess of $1 million. So for those business owners, they may not normally be in that income range, but due to the growth of their business over the course of their career, they may have substantial gains waiting to be realized upon the sale of their business. So this could drastically increase the amount of taxes paid on income from the sale of a business, which obviously decreases the amount that goes into the pocket of the business owner. So I want to walk through an example. Let's call this the case of Jack and Jill. So Jack and Jill are married business owners who plan to sell their restaurant chain, and they expect a gain of $3.5 million. Well, under the current tax law, 100% of that would be taxed at the preferential long-term capital gains rate of 20%, which is about $700,000 in taxes. Now, under the American Families Plan, 2.5 million of that would be taxed at the highest ordinary income tax rate of 39.6%. The first million would be taxed at 20%. But this would equate to about $1.2 million in taxes. So that's a difference of almost $500,000 in taxes. So due to the major tax implications of this new proposal for high earners, I think business owners planning to sell their business in the near future may want to consider accelerating the sale of their business to 2021. Assuming that Biden's new tax plan becomes effective in 2022, waiting just another 6 months to sell your business could mean the difference of hundreds of thousands of dollars in taxes. So for those expecting to incur over $1 million at least. As always, the right course of action really depends on your unique situation. The goal is obviously to maximize after-tax proceeds from the sale of your business. If your business is on track to substantially increase in value over the next year to the point where it would make up for any additional taxes by waiting, then it may make sense to wait until 2022 or later. Or depending on how much you plan to sell for, structuring an installment sale may help spread out the income to a point where you could stay under that $1 million threshold. All that is to say is that every situation is different. If you are thinking about selling your business in the near future, take into consideration upcoming tax changes. And as always, if you need someone to brainstorm with, don't hesitate to reach out. Well, thanks for watching. Have a great week.